So diversifying your portfolio. Why is that? Why is that a good idea? Well, diversifying your portfolio ensures that you're making the most out of every market condition. All right. So on the previous slide, I said that you could diversify in terms of strategy. So you may have a trend trading strategy, and you may have a range trading strategy for them when the market's consolidating and it's going sideways. What this will ensure is that no matter what the market condition, you are always taking profitable trades. Yes, you'll be taking losing trades, but your equity curve will be moving steadily upwards because if you have a solid strategy or solid strategies, then those strategies will obviously take losses, but those strategies should basically protect you from your losses in the bad times and make the most of your winners during the good times. So when one strategy is going badly, obviously you're taking some losses, but you're not taking anywhere near the size of the losses maybe some of your winners you're taking with one of the other strategies that are working at that particular moment in time. Does that make sense? So by diversifying your portfolio and having different, even if you're trading the same market, so we're all here looking at the FX market. So even if you're looking at the FX markets primarily, the fact that you've got different strategies there allows you to diversify your risk. So if one strategy isn't working, the other one is. Okay, sometimes you will get both strategies not doing so well at the same time, and sometimes you'll get both strategies doing wonderfully at the same time. But the important thing here is to smooth out your equity curve, so you get a nice upwards trending sorts of movement on your P&L. Does everybody follow me so far? Excellent. So how do you diversify? Well, there's kind of three main areas you can use to diversify. First of all, we just spoke about it, your technical strategies. So who here is a day trader? Anyone? Who here is a swing trader? Yeah. Anybody position trade here? You're a profit trader. Okay, here's another one. Does anybody who likes trading with the trend? A fair few of you. Anybody there like trading against the trend? So selling tops and buying bottoms? Sometimes. Okay. So what that should prove to you, just in this room here, we've got 31 people, okay? And we've had many different answers. So some of you are swing traders, some of you are position traders, some of you are day traders, some of you like trading with the trend, some of you like trading against the trend. What that should prove is that there's many ways to extract profits from these markets. And therefore, if you take a step back, okay, and you don't just focus on one strategy, but instead you allow yourself to look at 2 or 3 different strategies, for example. So you've got one for a range-bound market, one for a trending market. Maybe you've got one that's sort of like a swing trading system. You're in the markets for, I don't know, 3 or 4 hours to 3 or 4 days. And maybe you've got a position trading system where you could be in the markets for a couple of weeks to a couple of months. What this ultimately means is that you can have many trades on at the same time. And even if one trade may be losing you some money, you can also have other trades that are making you money. And as I said, if your strategy is solid enough, or your strategies, are solid enough, then the trades that lose you money shouldn't be losing you anywhere near as much money as you would be making with the ones that are obviously profitable for you. Okay? So the first way to diversify is in terms of technical strategies. The second is in terms of instruments. So, obviously you guys are here trading FX, which is fine. And it's a little bit more difficult to diversify just, with the one asset class with just looking at FX, but it is still possible. So, you may not want to be taking trades in the euro dollar, Aussie dollar, pound dollar all at the same time. Why? because even though you've got different base currencies there, the dollar part is consistent throughout. So if something happens in the US, okay, then that's going to affect every single trade. So if you're long all of those pairs at the same time, and some sort of I don't know, catastrophe happens in the US, that's going to hit every single one of those positions all at the same times. All okay, relog in and click yes. Okay. So even though it is a little bit more difficult to diversify if you're just trading FX, it still is possible. So maybe you may decide to look at some pound type trades, and then you might have 2 or 3 euro trades and maybe one on the Swissy, or but basically you try and chop and change it. You're not trading completely correlated markets. And the other way is from a little bit more of a longer term perspective, but trading different fundamental ideas. Okay, so for example, a little while back, we were trading 2 primary themes, my brother and I. The first theme was that the yen was way too strong for where it was. This is when it was down at sort of 78, and we said, ultimately it can't stay here for that much longer. It has to weaken at some point. So we were kind of building positions into that, and we actually rode that one up to about 95 before we got out of that particular position there. And the other one obviously was to do with with Europe and quantitative easing, and we were trading that accordingly. But they were longer term positions that we were building into over a period of time. So technical strategies, you can, how do you do that? You could have a swing trading strategy, day trading strategy, position trading, trend or range trading. And instruments and fundamentals, we actually already just spoke about that a little bit anyway. And I'm quite conscious I want to get onto the part where I show you quite an effective strategy at the end of this, and something that you can use, pretty much tomorrow to start trading and making money. So I won't dwell too much on the ideas and on the theory. We will work more towards the practical in just a second. But one of the things that I said to you earlier on today is that we have an advantage over the big funds, okay? We are actually in a better position than the huge hedge funds out there, the Paul Tudor Joneses, the Goldman Sachses, all of the big banks. Why? The answer is size, okay? These guys and girls, if they want to get in and out of the market, they need to plan way, way in advance. So they need to be looking at things like, they'll try and get into a position maybe over the course of a day to get their full allotment there, or sometimes even over the course of a few days, they'll be taking a position in a particular currency pair. However, with us, we can get in and out in literally the click of a button. A second, we won't move the markets. Okay, we are too small to move the markets, and that's actually an advantage to us because that allows us to be nimble. Okay, it allows us to be agile in the markets. We can get in and out without moving the markets, which means that ultimately, we're not suffering too much slippage on any of our positions. If you think about it, if you think about one of the big funds wants to take, billions and billions of dollars worth of a position in, I don't know, let's choose one of the more exotics, the Euro-Swedish krone, for example. They're not going to be able to get in there without the market moving. When they try to take their position, the market is going to move considerably. So what does that mean? Let's say, for example, let's hypothetically say that 1.000, okay, is the exchange rate. If not, but we'll use that because it's nice and round. If they wanted to buy and they bought at 1.000, it's perfectly within reason to expect the market, by the time they get into their full position, for the market to be 20, 30, 40, maybe even 50 points higher than where they first wanted to get in. We're complaining about having slippage of 1 or 2 pips, right? That winds us up, but they need to be taking positions where it may take them 50 pips or sometimes even more to get in into their entire position.